my question is this, sir. If you are doing your own technical analysis, how your time frame is it 1 hour or 15 minutes time frame you use in doing technical
Um,
analysis?
Actually, I use multiple time frame. It just depends on where I see the opportunities. But I like the opportunities can come in any time frame, right? But you have to make sure that the time frame you are trading in it aligned with your indicator, like with your strategy, right? It's like based on your plan, you can look at the daily time frame to
Okay.
see to zoom out, like to see what is going on in the market. Now you can see that on a daily time frame, we are seeing there is some sort of recovery. Yeah, this is green candle.
Yeah,
Now recovery from what? This dip here that
this
we
deep,
saw
yeah.
during the the Fed declaring most of the crypto asset as securities, right? So this dip it started from this area here, this zone here. This was the area where the dip started,
Yes,
right? And
yes.
we saw this dip. I think that was about 3 days ago or 4 days ago, something like that. Now we are seeing recovery back to that area because you have seen that the market is in an uptrend. Now, like recovery mode, even though it's still in a downtrend because we haven't seen any sign of like on the daily time frame. I haven't seen any buy signal on my indicator. Yeah, I see only the sell signal. Now this area is an area where I want to see price to come and either like to retest and break it, and if it doesn't break it, then I know price is gonna come back down and maybe
Back
make
down. Yeah,
lower lows, right?
yeah.
So I go now to the 1 hour time frame to look for trading opportunities. You can see here that on a lower time frame, you can see clearly that price is making higher highs here,
Oh, yeah,
and
yeah.
yeah, there's a trend line that price is respecting. And this trend line, you can draw this trend line here on the 1 hour time frame to give you an area where we can see a possible bounce back if say price is gonna bounce somehow. Right now, you are trading this 1 hour time frame, and the target is here. You know that this is the target here. But how did you know that this
Yeah.
was a target? You zoom out on the daily time frame to see what price is doing. So now you can like I placed that trade my trade yesterday, yesterday. I took out profit, but I knew that it's gonna come back to bounce this area, and it bounced. I bought again, so I'm using this in movement like this up and down movement to make profit. Now that I've maga zone, I now go back now on the 15-minute time frame and 5 minute time frame to look for more buy and sell opportunities. So I love to stay with the 15-minute time frame so I can see what price is doing, like price action. And now I see that price is respecting this. There's a trend line on this 15-minute time frame. Now price is respecting the trend line and it's moving along this my indicator here. You can see this indicator here, this this buy signal here. Immediately price break that zone, this area here, like, and from what I can see here, it's telling me that price might come down in this area. If price doesn't come down to break this area, then this is going to be the next area of interest, because you can see right now um there's a slight difference at this area here, this area here. When you look at this indicator here, this alpha trend here, you can see you are seeing this red and almost should I say blue line, red blue going up, red blue. But now we haven't seen it yet. We are seeing more of red line going down to the down and like going sideways, meaning this upward like candle you saw here, this was a trap. This is a trap, to liquidate or to squeeze, those who are actually let's say who have stop loss here. So they are squeezing them out, you know. So we're gonna see a retest back, and maybe if possible, if say price doesn't break this area here, if price doesn't break this trend here, this is where we can see price to be moving around. You can see here, if price break that area, then you're gonna say, okay, I'm gonna exit my trade, wait for a pullback. Yeah, this like this trend line here, you're gonna see that price will come back there to retest this trend line. So this is how I go about looking at, like, if say I'm trading, this is how I go about doing it on multiple time frame. I don't know if I answer your question properly.
Yeah, yeah, yeah. I love that. I think I will also apply that in my own technical analysis because I use 5 minutes, 15 minutes, and 1 hour to 4 hours because of time.
Ye- what I will recommend is you avoid using 5 minutes. Like this is how I use 5 minutes. Let me tell you how I use 5 minutes. 5 minutes for crypto. 5 minutes is cool for forex, but crypto is
Yeah.
so volatile. You use 5 minutes for entry, and maybe to an extent, you to look at the sentiment, because like with me, this is what I do. When I look at the 5 minute time frame in this case. Now this is the 5 minute time frame, right? I have an indicator that I bring here. I'm gonna bring this indicator right now. Now you see on the 5 minute time frame, I have this nine day moving average, right? So I wanna see price, just around this, up, down, then making higher highs. So I use the 5 minute time frame to see this. Now, if I'm bringing any other indicator, is this one, this moving averages, and it's gonna now tell me that because price is far away from the 2021 day moving average, that means there's high chances that we're gonna see a pullback, towards this area, yeah, this zone here. And why? Because price have to always come to retest this 21 day moving average if say it breaks this 9 day moving average. You can see, yeah, and because the 9 day moving average is actually looking like to the moon, I know it's gonna break to come and retest this. You can see it happened here multiple times in like below here, and this is how you can use this other indicators like moving averages to on this lower time frame. And the same thing if you go to the lower time frame, you can see here that on the lower time frame, on the 15-minute time frame, you can see it's almost similar to what I told you, right?
Yeah.
And with this, I know I'm still in an uptrend. And if say I see price break this 20-day moving average and start trading below the 20-day moving average, and I know we are in a downtrend, then I'm gonna wait again for price to play around the 50-day moving average. If say price doesn't hold at that 50-day moving average, then I know the next target is gonna be the 200-day moving average. If say we are going right down, you can see this indicator here, this line here that I'm showing here, this area here, it represents support and resistance here. Now price is always going to come to rebound to bounce, and we saw that price have been doing this on the lower time frame. We saw it bounce here, it come here, it bounce here. Like let me draw this here. Price came here, price bounce, went up there, it come here, it bounce, it went up, it come here, it bounce, it come here, and now we're wanting to see it if they're gonna bounce again somehow. Yeah, do you get it?
Yes, sir.
So these indicators can help you to limit your risk and maximize profit. So that that if say price get to either of these zones, yeah, either know that now is the time for you to get out. Don't trade on your sentiment, trade on what the charts are telling you to do. What the chart are saying, they speak. That's the chart represents investors, what their sentiments. And when you see investors, play like the chart going doing like it means there are still more buyers than sellers in the market. But when you see pullback, you know that okay now, because we are breaking these different indicators, then it means that there's something happening. Like we are going to see some sort of reversal soon. Like okay, look at what I told you. We are seeing it's playing out now. I told you that this was some sort of like a fair move. Now we are seeing it that it's now coming back to retest that area. Yeah. So if you would have sold here, let's say you are scalping, you would have sold here, you would have waited for it to come back here, then you buy again. This move here is good for those who are scalping. Any more
Okay.
question?
Yeah. Actually, you made mention of 5 minutes is for forest. Mm.
Yeah, 500 is forex because
Actually, yeah.
forex is not
Uh,
that volatile as
yeah,
crypto.
yeah. Actually, what I use in learning, in fact, what I'm using to interchange crypto is forex because I started learning forex using price action. You understand? So I use 5 minutes and to analyze the chart to know the up whether if the market is a uptrend or downtrend, and also to place my stop loss and take profit also. You understand? Because of time, it's kind of it's not that highly volatile compared to cryptocurrency. That's the
Yeah,
reason
yeah.
why I said I use 5 minutes also. But since they said using 5 minutes time frame, to analyze somehow in crypto, I think I have this one of a great lessons I've learned now from you also. I will stop using it because though I use it sometimes, I do go against my market, do go against me
Yeah,
because of
you always be
volatility.
stop out at one point, so you have to avoid
Yes,
that. You can use it when you are already in you have already seen a clear trend in the market, but you have already
oh,
like placed an angle where you know you should basically looking at the higher time frame. You know you have an
yeah,
angle, knowing that okay, this angle is an area where you're gonna take like, should I say, profit, right? Then you're gonna place your stop loss here. Then you take, okay, you already have your take profit zone already as well. Sorry, your stop loss and take profit. Then now you are in the market now on those lower time frame to like, okay, maybe you want to like, maybe because usually the market doesn't play out the way you want it to be. So
yeah,
there might be something going on in the market that you, okay, now let us take our profit, because if say we see this trend break out, we're gonna see some pullback, cool off in the market. And when market is cooling off, you want to be out of the market. And also something like that, like on the lower time frame, can also give you opportunity to add more like to buy more, to add to your already existing position. So let's say you use 10% to buy, and you saw that, okay, now market is making higher highs, and because your stop loss is so far away, because you know that there are different levels, like, support levels, that if say it keep respecting those support level,
what
then
else?
you want to keep being in that trade and adding more positions. So you make more now, like more money. And you can do this on spot, not only futures. You can do this on spot. You can have, let's say, $1,000, and you look at, one, like, you follow one trade per time. Don't go, every, like, don't follow the noise. Take your time. Okay, go through. If it is the market is tumbling, look at Bitcoin, look at Ethereum, look at, okay, you say now maybe Dogecoin or Floki, or maybe other coins out there that you are following, the community. Now, the reason you're doing this is you are using these coins. You're using Bitcoin to analyze this coin. So whenever a Bitcoin pump, you look at this coin. When are they pumping? Are they following Bitcoin immediately as Bitcoin is pumping, or are they paired with Bitcoin or Ethereum? When Bitcoin pump, do this coin also pump with Bitcoin or Ethereum? It's important for you to know this. And when it pump, like with Bitcoin, alongside Bitcoin, how many percent it pump as compared to that of Bitcoin? So when you are able to analyze this, then you know that, okay, if say you are in Bitcoin and Bitcoin fell 10%, because I showed that that coin that is paired with Bitcoin will fall about 30% or 20%. Now you have an opportunity that because you know that Bitcoin will recover anyways, and when Bitcoin recovers, this other altcoin will recover alongside Bitcoin, and they will do about 30%. Now you have lost 10%, then you make 20% to the upside, right? And once
Yeah,
you do that, you come back into Bitcoin. You understand? So that's
yeah,
how you do, like, every day, every week. When you see, you do every week, because that's how the market goes. And not only like a particular altcoin, you can have a list of altcoins that you go through every day. Or you are part of a community like this. Like, I go through different coins every day. You
every
can
day.
see, okay, the Bitcoin is talking about this coin today. I'm holding this coin. Maybe now is the time to get out and buy and be in Bitcoin or USDT. You can be in USDT, right? And once that happens, then you know that, okay, now your time for me to get into this coin. And because let's say you hold about 100, let's say $500 in Bitcoin, you can start buying that coin DCA with Bitcoin. You can buy 20%, 10% until you see a pump, then you sell and buy back Bitcoin. What does is you make more Bitcoin. So you have used that altcoin to mint more Bitcoin. You understand? So that's how you stay and avoid being in the dollar, and you make more money, because Bitcoin is the alpha. Bitcoin will always do that. So um those who don't understand how to trade like futures, this strategy is good for them also on spot trading, right? Then when you see different zone, imagine that. Let's say you are able to make just, let's say, $2 every day from your $100 investment. Or you are making, let's say, $5 every week, right? Or $10 every week following this. Look at this for the next 1 year, right? That's how you build portfolio. Maybe in along the way, something might happen that will, like that, you buy spot and you see that project, the upside. Like one day a coin might do 50%. Now you sell immediately, because there will always be a pullback. Always there's gonna be a pullback. So you are selling now to buy back Bitcoin, because Bitcoin pullback will never be that drastic ever. Because of the high liquidity in Bitcoin. And Bitcoin, most people are holding. So that's the idea here in this market. You need to actually understand the market dynamics. As you trade, don't just trade because you see the chart, but you are looking at the alpha, the top coins out there, what investors are doing before you even buy this. You should even start trading, because from that you can know what direction the market is going towards. You understand?
Yeah.
Yeah. Okay. If there's no more question, then we call it a go
Okay.
for today.
Okay. All right, sir. Oh, that's one more question.
Okay.
Yeah. Since I am dealing on technical analysis, is it advisable to also go into fundamental analysis,
You look at it this way, just like
just to combine both of them together?
yeah, combining both of them will make you a money making machine in cryptocurrency. But focus more on the technical analysis. The fundamental analysis tells you what the project is all about. If say it is good or not. And are they keep building? Are they keep delivering what they promise to the investors, or is their platform usable? Do they have product? So those are fundamentals. Are more people buying this coin? Are there more wallets adding? The on-chain activities. What's going on in the project? Do they have a good marketing team? Are they actually building? So those are the fundamentals. Now you have to you have to face the reality. The fundamentals now will reflect the technicals. Investors doesn't care more about fundamentals. You know, if say they already know that the project is good. So when they've already done the first analysis that of the or like the fundamental analysis, they know, okay, this is good. They don't care again afterward, except something happened that I was like, okay, now you know this project is like this. Maybe they're not delivering. Maybe long term, I don't want to hold this project long term, but this project have good volatility in the market. So I can only trade this project, but I
Make
won't
profit.
invest in long term. So you have long and short, both long and short positions in the market in that coin. Like you are buying it for long term and you are trading it. And when you realize that okay, the fundamental is not good enough anymore, you focus only on trading whenever you see an opportunity in the market, because the upside for that token is huge when there's something big in the market. Like when Bitcoin is pumping, these altcoins are going to pump as well. So the fundamental is actually going to give you an urge as to what the project is all about. Now, the technical will tell you what the investors are doing.
Doing.
Are they buying in now? Are they selling or not? So don't listen to all the noise that people will say you, oh, this is a good project, it's the best, you come. No, look at the chart, right? The chart will tell you what investors feel about the project. But when you fall in love with a project and you say it's good, you want to become a millionaire, you're like, when you see a pump, you leave your money there, and before you realize it, it's back to where it started. You lost everything.
All right.
You
All right.
understand?
Yeah.
Yeah.
Yeah. Okay, because because of emotion, that's the reason why I no longer focus on fundamental, because of the news, the noise everywhere. So
Yeah,
that's the reason.
fundamentals can make you be so attached to a project, but the only fundamental that should make you love a project is Bitcoin and Ethereum. When you love Bitcoin and Ethereum, right? Because they like Bitcoin. Like my portfolio, I have 60% Bitcoin and 40% Ethereum. Now I'm trading altcoins to buy more Bitcoin and more Ethereum. You understand? So Ethereum and Bitcoin are like my own dollar. You understand?
Yeah.
Right? Because I feel safe being in crypto than being out of crypto. Of course, there is this saying that um, you know, when the market is tumbling down, you want to stay out of crypto. But that's not the case. We have been in a bear market for a long time now, and we are seeing
Yeah.
recovery, right?
Yeah.
So because we are seeing recovery, where should I keep my money? Because you see, when you look at the downside for Bitcoin, it's not that significant as to what we might see to the upside. Because I understand the fundamental of Bitcoin and Ethereum and the technology behind it and what might hold to the upside, I should keep my dollar in Bitcoin. Why should I keep it in USDT? Right? Unless I've seen Bitcoin go to the all-time high, make another all-time or another high, then I was like, okay, maybe I should start limiting my position in Bitcoin into stablecoin. Then like I sell everything and maybe keep 40% in Bitcoin, then the rest in stablecoin. Now I know that I'm protecting myself, maybe we might see like a dip. Now I'm focusing on trading that like the movement now in the market. Now I've limited my long-term position, in stable coin that I know that okay, now I can diversify it into other assets. I can buy stocks, I can buy forex, I can buy any other thing else that is doing well during that period in time. So look at it as a way that you are building wealth gradually. You are building something sustainable. You have a plan and you have a structure that is helping you always to make money, regardless of what's going on in the market.
All right.
Yeah, I have to go right now. Like right now, I have an appointment soon. So,
All right.
it
Thank
was
you, sir.
awesome to have you here today. Hopefully, this session has added some value to you. Those of you who are watching, make sure you do subscribe right now for more content like this. And if you say you want to be part of my community, links are found below this video. You can join on Telegram. You can also, if you say you want one-on-one with me, of course, you can also be part of my community. All right, I think that's that. Have a nice day. Bye bye.
All right. Thank you, sir. Thank you, sir. I appreciate. God bless you, sir.
You're welcome.
Yeah. Thank you.